to us. So the first year we have Mr. CHINEVU AMADI. Please, if you are in the house, could you please say hi, Mr. CHINEVU?
Hi.
Hi, you're welcome, sir. Good afternoon, sir. Thank you for joining.
Good afternoon.
And also on the list, we have Mr. GODWIN ADEKOYA. In the house. Can we hear you? Okay, not yet. And also the last but not the least, authors, guest speaker, business coach, TUMI SIBANDA. In the house, can we hear you? Good afternoon.
Good afternoon.
You're welcome. Thank you very much for joining us. So we're all welcome to this program, and the aim solely and simply is to develop financial literacy, the mindset, also get to know about the different techniques and ways on how to achieve financial prosperity out there, regardless of how the economy is, regardless of what we might be going through at the moment. But there are always answers, there are solutions when it comes to financial freedom, and it is best to learn on the shoulders of giants, where we have the three of them right in the house this afternoon. So to be kickstarting today's program, this evening's program, I have with us TUMI SIBANDA. So here is a breakdown of the agenda. We're not going to take too much of the time, so we'll just go straight to the point. Kickstarting will be having the right money mindset, how to develop the right mindset. So a brief profile about TUMI SIBANDA, who is a life and business coach. She helps professionals, she helps entrepreneurs, she helps business owners who feel stuck or unfulfilled in their career or business. So with tools to gain clarity and direction to grow a fulfilling career or purposeful businesses. So she has written so many books. She's a certified life and business coach. She has a camp. She's also the founder of Coaching for Dreams. So she helps clients through using our 4-part transition framework, which she has available. So she has books, she has workshops, all form of tools that you might need to gain more clarity and direction when it comes to your career and your purpose in life. So welcome you once again to me. And as we kickstart, go straight to your topic, having the right money mindset and how to develop the right mindset. So over to you, TUMI.
Thank you very much for welcoming me. And maybe to start, thank you very much for inviting me to be part of this conference. And I think maybe I should say thank you to Anthony, because he's the one who really reached out. When I was asked to come talk to this conference, I said, this is about finance. I'm not a finance person, but then as we were talking with Anthony, we agreed that the issue about mindset is very important. So I will be talking to you about financial prosperity mindset. And the things that I'm going to be talking about in this conference or in my talk, they are really applicable in different areas of your life, not just your financial life, but we're going to just zoom in on the financial life. So when we look at the topic, financial prosperity mindset, I just looked at these two keywords, prosperity and mindset. When we look at prosperity, what is prosperity about, really? It's a state of being. It's a state of being successful. In fact, it's a state of thriving. So when we're talking about financial prosperity, we're talking about how do you get to a point where you're saying, I am thriving financially. That's number one. The second word or the key word that I wanted to focus on is mindset. When we're talking about mindset, it's really about our way of thinking. And you will see as I continue with my talk that the thinking is particularly very important in getting us to the mindset that we want to have when we're talking financial prosperity. I will be using financial prosperity and money interchangeably throughout my talk. So there will be times when I'm talking about the money mindset. So let's get into it. I want my talk to really address the following questions. Number one is, what is financial prosperity mindset all about? When we are talking about financial prosperity, what is it all about? So that's the question that we want to answer. The second question is the role of knowledge. What is the role of knowledge in developing the mindset, the money mindset? So what is the role of knowledge? And the third question is really what is at the core of our money mindset? And we'll delve deeper into really getting to understand ourselves and our stories a little bit. And then finally, we're going to look at what I believe is the ways that we can develop the money mindset. So we're going to answer the question, how to develop a healthy, underlining that word, a healthy money mindset. Right, so let's get into it. So when you think about, we're not going to answer the first question first because the whole presentation is about us answering the question, what is financial prosperity mindset? We're going to answer that as the last question. So we're going to start with the question of the role of information or of knowledge. So when we look at ourselves as individuals, at any given point in time, we're operating at 4 levels. The first level is the level where we don't know what we don't know. So we call that level the unconscious incompetence. So when we operate at the unconscious incompetence level, it means we exist in spaces where we don't know certain things, but we don't know that we don't know that. And I always say that's a very dangerous place to be at because that really spells ignorance when you don't know what you don't know. And I say to people, when I talk to people, even to my clients often, I say we always need to strive to get to a point where we have an understanding of what is it that I don't know yet, so that we can move ourselves to a point where we can start knowing something. And I think conferences like these are a way of ensuring that we keep moving ourselves from the level of not knowing what we don't know, getting to knowing what we don't know. So the next level is knowing what you don't know. And the example that I like using is when we look at a car, you can imagine the first person who really got to see the first car on the road. They probably asked themselves, what on earth is that? And how do you even operate it? So they know there's something that is moving on the road, but they don't know how to operate it. They don't know how it operates. So they are in a space of saying, I don't know what I don't know. And now once they've seen the car, they start realizing, I know there's something that I don't know, and I still don't know how to do it. That is the level of conscious incompetence. So that is the space where we operate in conscious incompetence. It's a good space for us to start acquiring information and knowledge for us to be able to grow. So I always say that's the starting point for ourselves to start growing. So we call that awareness. So that's where awareness starts happening. Now, here's a phrase that we often hear most of the time, that knowledge is power. I am of the view that knowledge is not power. It is the application of knowledge that is power. And the reason why I say that is that when you have the awareness that I don't know something, but you do nothing about it, that's where it ends. having that information and the knowledge of what it is that you don't know, it's where it ends. So it becomes important that we start acting on that we don't know, so that we can start acquiring the skills for us to move to a point of conscious competence. Now, if we go back to the car analogy, conscious competence is when someone has started learning how to drive. Your driving instructor has told you, this is how you operate a car. You know, if it's a manual car, you clutch in and then the gear lever to one and you release the foot from the clutch slowly and then, you know, accelerate just to put the gas a little bit. Then you get to understand. That's conscious competence. But you're not the master yet of that driving skill. It becomes important that we then deliberately act on the new skill, keep practicing it daily, weekly, monthly, until it gets to a point where we are in mastery. And when we are in mastery, we know that we start operating at the level where we say it's unconscious competence, where things happen almost as second nature. I now drive, I can listen to the radio while I'm driving. When I started driving, I couldn't listen to the radio while I'm driving. It was just too much of a distraction. Now you can drive, listen to the radio, and with the cell phones connected to Bluetooth, you can even talk on the phone. Sometimes we get to that space of even wondering, how did I even get here? Because you just drove. So the importance of having information and gaining knowledge is in us applying that. And my invitation to you is every information that you're going to be gathering here today in this conference, map out a plan for yourself and say, how am I going to apply this? And I'm going to share something that I learned from Dr. Maxwell, John C. Maxwell. He talks about that when you learn something new, you have on the margin of a book, if you're reading a book, to write, this is something that I must apply. So you would put an A next to it. Or this is something that I must teach other people, you would put a T next to it, right? So whatever action you want to take on your notes that you're going to be taking today, just put what action do you believe you want to take. So something to start practicing, something to maybe learn further, something to share with other people. So that's my invitation to you. So that is the role of having information. There's lots of books that have been written on the topics that are going to be spoken about here today, but many people have those on their shelves and they're not applying that. And those books are of no use to them because of not applying. So this is my plea for all of us to start applying. So that is the role of information and gaining knowledge. The second question that we need to answer is the question which really is the crux of what I want to talk about. What is at the core of our money mindset? So when we look at human beings, how we operate is that we think, right? And then we talk about what we think about, and then we act on what we think about. So at the core of our money mindset is our beliefs. What is it that we believe about money? That's the first thing. The second thing that is at the core of our money mindset is our past experiences. A lot of people call that, what is your money story? They would ask that question, what's your money story? We all have that. We all have beliefs about money, and we all have stories about money. Either from childhood or throughout our growing up, we've had experiences. All those they form the core of what it is that is your money mindset. So when we look at, let's just look at beliefs at first. Beliefs are really those core things that we believe to be true, whether they're true or not, but we believe they are true, all right? When we look at money beliefs, some people have beliefs like money is the root of all evil. Some people have got beliefs that it's very hard to make money. Some people have beliefs that you know, when you have money, you must hoard it because, you know, it's very difficult to make money. So those kind of beliefs that we have about money, they form what we think occasionally, not occasionally, regularly about money. When we interact with money, what is it that we think about? So those beliefs are really the core of how we show up when we deal with money. Our beliefs really run our lives on autopilot. Some of us have got beliefs that are running our lives on autopilot, and we're not aware that those beliefs are actually running our lives. It is only through slowing down and observing ourselves that we'll be able to identify our behaviors, and then we can ask the key question: what is the sponsoring belief to this behavior? So if there's a pattern that keeps showing up in your life, then you can ask the question, what is the sponsoring belief to this particular behavior? And this is where our money experiences or our money story comes in. Most of us, our money stories was developed when we were young by observing our parents. Some of us, it might be because at church, we have seen how money is dealt with at church. So in our childhood, the experiences that we have encountered with money would form part of the core of our money story. And our money story always dictates how we actually show up, the kind of relationship that we have with money. So if you grew up in a household where you observed the money coming in, and money comes in, it pays the bills, and money is finished. That's your exposure to money. So money is here as a servant. It comes, it must pay the bills, and then we must then go back and work for some more money. And that creates patterns in your life, because that is the core story that has been planted, or the core program that has been planted in your life. It is until you interrupt that thinking or those beliefs and that kind of thinking and come up with new ways of interacting with money or having a relationship to money, that things will start changing. If you don't, you will find yourself in a loop. So my invitation to you is, when it comes to observing money beliefs or what your money story is, look at what are the patterns that you're experiencing in your life. The more patterns that you can identify, the more you can then say, what are the beliefs that are behind these patterns? And what really was my money story? What was my original money story that keeps happening, that keeps coming up for me over and over again? So those are the two core things that are at the heart of our money mindset. What we believe about money and what we have experienced about money in our childhood, in most of the time. Sometimes as we grow up, the experiences that we go through. So that is the second question. The third question that I want us to look at is really looking at how do we develop a healthy, and I'm underlining healthy here, how do we develop a healthy money mindset? It goes back to what is at the core of our money mindset. we need to be present in our lives and observe how we show up when we interact with money and identify the beliefs that we hold about money. The importance of doing that is that then we can ask ourselves, is this belief serving me or not? Because not all the beliefs that we hold serve us. Some of the beliefs that we hold, they hold us back. They actually keep us in prison. They keep us in fear. So you need to look at what it is that you believe about money and ask the key question. Is this belief serving me or not? And then you also need to ask the question, is this even true? You can even go into other people's experiences to see how you can debunk the myths of your own beliefs about money. If you're saying money is too hard to come by and you look at other people's experiences, money does come easy to them. Not that they don't work for it, but it's not a strive for them to get money. So you have to then say, is my belief about money being very hard to come by true? Or it's something that I have, just adopted maybe from my parents, from my church, or from the circles that I have found myself operating in childhood or as I was growing up. Once we have the answer as to whether the beliefs serve or they are not serving, then you've got a choice of how do you change that scenario. So the first thing is we've got awareness of what beliefs we hold. We've got awareness of what story we have about money and whether those two things, they serve us or not. The second thing that we need to look at is how do I then come up with new beliefs that will serve me when it comes to creating a healthy money mindset? So what kind of relationship to money do you want to have? And then create or set for yourself new beliefs. Now, new beliefs, once you've put them in place, they will not just by osmosis happen. You would need to be deliberate. And that is the third thing that you need to do. Be deliberate on a daily basis, even to a point of having daily rituals that will help you to get to practicing the new belief day in, day out. And over time, the new belief would become your new story, because then you're creating new experiences in terms of your relationship to money. So that is the third thing. So that's how you shift your mind and create a healthy mindset. It's by being present in your life and being deliberate with the choices that you make and being deliberate with the actions that you're going to take on a daily basis. And finally, to answer the last question, which is really about what is financial prosperity mindset all about? When you look at that, there's the way we show up as human beings. So your healthy money mindset is about what you believe about money. And secondly, it's about what you think about money. And then lastly is how you behave towards money. And I want to even add a subtext there to say how you think about people who have money. Because how you relate to people who have money will also give you, cues as to what your money beliefs are, that you can then start looking and say, how do I change? So going forward from here onwards is being present to what do you believe about money, what do you think about money, and also what do you say about money, and then how do you behave towards money? Because money comes to where it's welcomed. I'm sure you've had people saying money is energy. Money comes where it's welcomed. When you're operating or your relationship to money is fear-based, the money will come and go, or it will not come. So check how you relate or your relationship to money. So that is what I have actually prepared for you. I'm looking at the time. I don't want to go beyond the time that was allocated to me. So from my side, that is how I believe we need to move ourselves from where we are to a point where we can say we have a healthy money mindset. Thank you very much.
Thank you very much. To me, that was powerful. That was very, very powerful. Thank you very much. So we understand unconsciously our beliefs about money have been wrong all this while, and now we need to start following steps to change those mindsets, those beliefs that we have when it comes to money. Because looking at a typical African home, growing up, it's all about go to work and get the money, use it to pay bills. So we need to start shifting away from this mindset. And like you mentioned, the different steps include to be present, to be deliberate, to identify our different money beliefs and start changing them, working on them one after the other. And a very good way to start is to practice new money beliefs. Talking about it, hanging around people who are much more exposed than we are, which is why we have the three giants in the house. So we thank you, we appreciate you for this very short and concise presentation about money beliefs. So I believe there'll be room for question and answers towards the end of the program. So please stay with us and move on to the next topic very briefly. Thank you very much. So next, we're moving on to, now that we've identified our money mindset, now let's move on into learning investment in the stocks market. So more of how do you apply the knowledge of investment in the stock market. And with us this evening is our very own, is an engineer, is also a finance guru with CFA level 2, the person of Mr. CHINEVU AMADI, who was once a former chief financial officer with RISEVEST. If we know, RISEVEST is a very popular investment platform in Africa, based here in Nigeria. So Mr. CHINEVU combines a unique experience of both engineering and finance. So he's a recent MBA graduate and a CFA level 2 candidate with experience in investment banking, project finance, private equity, asset management, and corporate finance. So we are very glad to have you in our midst, Mr. CHINEVU, as we learn more about how to invest in the stock market and how to grow our investment. Mr. CHINEVU, you're welcome to take the away.
Yeah, thank you. Okay. Hope you all can hear me.
Yes, loud and clear.
So I created the PowerPoint slide now. Let me just share my screen. Can you see?
We can see your screen, yes.
So he has given a brief summary about my profile. What I also want to add, so basically what I do now, I trade the financial markets with my own money, and I also have a YouTube channel where I talk about general investments. So basically the link to the YouTube channel is here. Also at the end of this presentation, if you want, I will send the slides to the organizers. So if you just want a copy of the slides, you can also get it from them. So I'm talking today on investing in the stock market. So I'm assuming that we have a general understanding of what the stock market is. But before we start, I want to ask a question. So we can make use of the chat. If you've ever invested in the stock market, maybe you bought stocks or you currently have stocks, can you just drop in the chat, using the chat, if also you've not invested, you can just put that you've never invested so that okay, how do I access the chat? Okay, that's nice. So I can see that 2 people have invested. Please, I appreciate if I can get more response because that's kind of tailor how the assumptions I will make. Okay, never. Okay, so basically we have people that have invested and people that have not invested. So that's it. Now, why do you invest in stock markets? The first reason why people invest is one, grow wealth. I don't think there's any of us here that is a billionaire. Even billionaires, they still want to get more money, right? So if you no, money is something that you can't say I have it or I don't want anymore. So people want to grow their wealth. That's why they invest. Then also to preserve wealth. Imagine that you have an inheritance. I want maybe you're looking at the next 5 years. You want to use this inheritance to maybe pay for your postgraduate studies or graduate studies. You could actually invest in the stock market, or you are working. You can also invest part of your income in the stock market so that when you retire, you can start getting back part of this money as income. Then liquidity. So when I mean liquidity, I mean how easy is it for you to convert to cash? So let's say if you have a house now, you can have a house and you want to sell that house. It may take some time. Some houses can even take years before you can be able to sell it. I've seen properties that have stayed like 10 years before you get a buyer. But that's not the case with the stock market, especially for people that are not very, very big players, right? So you can easily, let's say, have like, if you have a like $50,000 worth of Apple stocks, within a day you can liquidate it and get cash, right? Depending on your broker. Then openness. Stock market is something that is very, very open. So let's say you buy Apple stocks, you can at every trading day check what's the price. Also, Apple they own the shareholders duty to publish financial reports every quarter. This is different from some asset classes. So, for instance, real estate, you want to rent a house, you don't even know what the last tenant paid. I want to buy a house. You don't know how much it costs to build a house. You don't even know what the next house costs, right? So there's a lot of arbitrariness in that, but the stock market is open. So these are part of the reasons why people invest in the stock market. But I'm really going to focus on the first two, which is really to grow your wealth and to preserve your wealth. Stock market, like every other thing, every other discipline has its own language, right? So if you're a medical doctor, you have your how you diagnose ailments. If you're a life coach, you have your psychology terms and everything. You have to have that also. Also, the stock market, it has its own languages. Now, for you to really be a good investor, you have to speak the language that the stock market speaks. Now, there are a lot of them. Yeah, there are over like maybe even 1,000 of them, right? But I just put in these few ones to kind of tell you what you need to know to make you a better investor. So basically, share of stock is a unit of ownership. Imagine a company like Apple, they divided their company into, let's say 10 million parts. Then each part is called an Apple share. So if you own one part of it, that means, let's say you own 1 out of 1 million or 10 million of Apple. Then stock exchange. Stock exchange is where the actual buying and selling happens. Just like you want to get a car, go to your car dealer. You want to buy groceries, you go to the mall. If you want to trade shares, you go to the stock exchange. In the days gone by, the stock exchange was actually a physical location where people go to buy and sell. Now, to buy and sell, people like yourself and I, we can't go to the stock exchange, but we use a broker. So broker, they have share, or let's say they have seats on the stock exchange. So we'll give them orders and they'll help us trade there. But with the advent of the internet, most trading happen on computer system. So basically, the exchange, you have a server where brokers using their own computers will now connect to the server of the stock exchange. So using your smartphone, you connect to the server of your broker, while your broker now connects to the server of the stock exchange. That's basically how the stock markets work these days. Now, primary market is, so if a company is listing for the first time, they list in what we call the primary markets. Primary markets, basically people that operate there are the big banks and some institutional investors. So after a company lists on primary markets, they are now moved to secondary markets where people like yourself and I can also buy. So IPO is also initial public offer. Basically, that's a company, they are listing their shares for the first time. Now, market capitalization is what a company is worth. Now, it's very easy for new investors to kind of confuse the market capitalization of a company with the share price of a company. So, for instance, the Facebook, the current share price of Facebook is around maybe $240, but the market capitalization of Facebook is about 600 and something billion dollars. So that's also give us an idea. And that the share price is expensive does not mean that the company has a very high market capitalization. There are some companies that will have very, very low share price, but also that their market capitalization can also be very, very high. So market capitalization is just the number of shares. So into how many parts did this company divide themselves, multiplied by the share price. So that's just what market capitalization is. Remember, like I said, that this is just very, very few of the technical terminologies that are used in the stock market. So as you invest, you should try and acquaint yourself with some of these languages so that you can understand what they are saying. Now, to invest, ask yourself, which market should you invest? With technology, it's very, very possible to invest in a lot of markets, even markets that were basically out of reach of the retail investors. For instance, I'm in Nigeria here. I've bought shares of US companies. I can also buy that of Asian companies in China, companies in Japan, because of technology. But as an investor, the one thing you should ask yourself, one thing you should know is I cannot invest in all the markets. Just in US, the over like 3,000 public listed companies. So it's very, very hard to track all of them. So you can't invest in all the markets. Also, the companies to invest, you can't follow all the whole companies. But following a company can be a whole lot of work, right? So for you to invest, I said, which company should you track? Which company should you monitor? Which company should you be analyzing? Then last thing is also, which broker should you use? Remember that I mentioned that we can't go to the exchange to trade, but we have to go through an intermediary, which is a broker. So there are different kinds of brokers. For me, choosing a broker, one thing I look at is their track record. I look at their fees. For instance, there are some brokers, let's say in Nigeria here, that to assess them, when you assess them, their fees could be high, right? They could charge as much as 1% per trade. But I know there are some also brokers that could charge as low as 0.3%. So these differences are things we should consider before choosing who which broker to use. Now, also, as an investor, you should ask yourself, what's your time frame? Are you a trader or are you an investor? So traders are people that have very, very short time frame of investing. A trader could buy a stock and hold it for just 30 seconds before selling it. A trader could buy a stock, maybe hold it for some weeks, and then to an extent to some months. One investor has like 3 to 5 years time horizon. So here, if you're investing, you should know that investing is a marathon, it's not a sprint. And your time frame should be a bit long for you to become an investor. So it's very easy to confuse yourself, because if in my mind I want to invest, but as my actions are that of a trader, I'm going to lose money. That means if I buy a stock today, and let's say tomorrow it drops by 10%, I'm going to sell it because my money has dropped. But an investor will, instead of thinking of how can I even buy more to kind of lower my average cost. Also, your time frame will also let you know, okay, when should you sell? When should you add more? That's also something you should define. Now, how do you analyze markets? You analyze market based on what there are people that for them, you don't even, you just hear that their friend bought the stock and you just buy it. Or maybe they are watching the news and they heard that this company is going to do well. Without doing any analysis, they just decide to buy the stock. For you to buy a stock, these are things you should know. One, you should have done your analysis. That's one. Two, what price should you buy? Three, at what price, at what's going to happen? It's not just about price. What's going to happen for you to know that is a wrong investment? And then the last one is, at what price should I take some profit? Because basically how the stock market happens is that companies can be undervalued for quite some time. A company can be undervalued for a year, 2 years, 3 years. And a company can also be overvalued for a long period of time. So if you feel that you have made an investment and you see that your company is overvalued, what you should do is to take some profits off the table. Let's say you bought Apple shares of, or let's say shares of Tesla when it was like below $100. And currently, see the price of Tesla $700. There's no harm in taking some profits. Take that profit and use it to maybe put in some other area. Maybe you can use it to change your life. You can use it to maybe purchase more assets. Maybe you can use it to travel. You can use it to do a lot of things. But you see people that when their investments is in huge profits, they don't take profit. Why? Because they still keep hoping that the price will keep going up. Yes, it can still keep going up, but if you have a plan and you're in profit and you just take some off the table, that gives you flexibility, right? So that tomorrow you see a business opportunity, you can take advantage of that, or maybe do some other thing else which money can help us to do. So which tools should you use? So there are a lot of tools that could help you become a better stock market investor. One is Yahoo Finance. So Yahoo Finance is very, very rich, and a lot of the functionalities they are free. So you could access Yahoo Finance, read their news. Then also financial statement of companies. You could also check every publicly listed company releases financial statement every quarter. So you could read it out. So if you make an investment, don't just go and sleep. Every quarter, once you release financial statements, check it and know this company, why invested, are they still true to what they say they are doing? Check out the numbers. Their profit, is their profit growing? What's their cash position and all that? TradeView also, as an investor, you also need to know TradeView, so I can able to chart and see how the share price of the company is moving. Also, and then it is also a lot of other tools which I didn't just include here because of I feel that this three can be enough for a start, right? But as you progress, as you become more advanced, you even discover tools that which myself may not even know about. Now, what are your expectations? For you to be an investor, you should have an expectation. What do I mean by expectation? How much return should you be expecting from to make from an investment in a year? Generally, the stock market makes, so if the market as a whole makes around, that's for the US market, makes around 11 to 14% per year. So that should guide your expectation. So when I say 11 to 14%, I mean, like, if you take it like over the last 30 years on the average, there are some years that the returns will be more. There are some years that the returns will even be negative. But if you average it, you get that rate. So for you as an investor, what kind of return are you expecting? Now, if you say you want to make 50% a year, it's very possible, but that means we are going to take on higher risk to be able to achieve that. One way of taking risk is by taking on leverage. So leverage is just asking your broker to give you money, to lend you money, and use it to buy a stock. But the problem with leverage is that, the good thing with leverage is that it can magnify your returns. But the bad thing with it also is it can also magnify your losses. So let's say I'm using leverage to invest in the market for like 30 years. If the average investor is making like 11%, and I'm using like 2 times of my capital, so that means, let's say I have $100 and I borrow additional $100, my return will be like 22% instead of the 11% that other investor that is not using leverage made. But if the market should go down, let's say the market underperform, maybe did minus 15%, that means I'll be losing 30%. So these are also things that should guide you. Now, I've said a lot of things for people that have not invested before, right? So what should you invest in? The first part to start your investment is you can start with index funds. So index funds, they are a collection of different companies put together. So in the US market, you have S&P 500. That's the top 500 companies in the US. If you buy a share of an index fund, what you are buying is that, what it means that you are buying a part of the top 500 companies in the US. We also have NASDAQ 100 and different kinds of index funds. So you can start with that. Also, people that want to buy individual companies, you can look at, okay, which companies make up the S&P 500? Could pick the top 10, top 15, and look at them critically and decide, okay, I feel that this one is going to outperform the index. And then you now decide to purchase the shares of that company. So that's basically that. I know that there'll be lots of questions. So let me meet you during the question time. So basically, I wish you a profitable investment. Thank you.
Thank you very much, Mr. CHINEVU. That was powerful, and very brief and concise knowledge sharing as well. Now I see why most people are always running away or looking for the quick money, because most people see all these financial terms and technologies as very boring, as very difficult to master and all that. But Robert Kiyosaki once said something that, do we think he loves to write? Do we think he loves to read? But he has to do all those things just because he has a focus. He has what he's looking up to. You have to learn these things if you're really, really serious about your financial freedom. You have to learn these terms and terminologies if you're really, really serious about compounding your wealth, about managing and also growing your wealth. So thank you very much for that knowledge sharing. Thank you very much for that. So as mentioned, we'll meet you in the question and answer session, because some people really, really love to know how to get started with a lot of applications, a lot of platforms out there pitching themselves to be investment platform. What are the things we need to look out for? Which one should we really go for? Or should we go to the stock market floor ourselves? So thank you very much for that. As we move on to the last but not the least topic, where we have our very own Mr. Godwin ADEKOYA, who will be looking and talking to us about the best strategies for saving money, and also looking more into he has the time to talk to us briefly about how people will get a home for themselves. So we started with the mindset, the money mindset. After that, we went into the investment. Okay, how can I apply this money mindset in the investment sector? And now, once I'm making some little money, now let's look into the best strategies to save, because we cannot totally rule out savings, we cannot totally rule out buying of properties with little or no money. So, Mr. Godwin, if you're in the house, can we hear you?
All right. Good evening, everybody.
Good evening. You're welcome, Mr. Godwin. So,
Good evening, everybody.
You're welcome. A brief about Mr.
All right.
Godwin
Thank you
is,
very much.
can I just read your profile very quickly?
All right. So can you hear me?
Yes, yes, we can hear you.
All right.
I would love to read your profile very quickly before you proceed.
Please go on.
All right, thank you. So Mr. Godwin is a business strategist, is also a financial advisor who has written a lot of books when it comes to becoming productive. He also wrote one particularly for students in the service corps, which is titled Hacking Your 12 Months of NYSC. He also wrote a book on how to sell and get new customers and becoming a millionaire graduate. So it provides financial advice and support to businesses and career professionals. It has helped to create investment portfolios, budget structures. Also, with his understanding of systems and structures, it helps various individuals increase their personal productivity, which I believe Mr. Godwin also has a group, more like a camp, where he mentors and trains young people who are interested in this growth. So it also helps the corporate directors, CEOs, improve sales at least 25% within the first month. So for those who would love to know more about sales, or if you want to improve your sales career, Mr. Godwin, you can meet up with him. He's also a member of Commonwealth 100 leader, founder and the president of a youth organization domiciled in 5 African countries: Rwanda, Malawi, Ghana, and Cameroon. So amidst all, Mr. Godwin is a leadership enthusiast. So he's here to share with us his wealth of knowledge on savings and getting properties with little or no money. So you're welcome once again, Mr. Godwin. So over to you. Mr. Godwin, over to you.
All right. Thank you very much, Mr. Anthony. I believe. All right. Do I have the ground now? Can you hear me loud and clear?
Yes, loud and clear. Yes.
All right. Great then. And also, can you see my screen?
Yes, absolutely.
All right, thank you very much. Okay, thank you very much to the organizing team and everyone who is here. Today we're talking about savings, but first of all, I want us to play a quick game. So, which are we, Team A or Team B? Are you the kind of person who believes that we need to have multiple streams of income first, then we save? Or should we start saving from whatever we have, then find a way to earn more? Let's go. That is where we're going to start from today. So I want us to go to the chat room and signify which are we. Are you team A or are you team B? Which one do you believe in? Do you believe that anybody or any person should start saving, or no matter what you have, just start saving, or you should have multiple streams of income first before you start saving? Let's go, let's go, let's go. All right, I got some people who are responding already here. Amadi says it's team B. Maret says team B. Munjoku says team B. Solar system A thing to actually do, especially in a situation or in a country like Nigeria. Which do you think is, or in any part of the world that you're currently in, Africa and South or North America, in Asia, Atlantica, wherever you are, what do you think is the best practice? All right, Z says team B, some money as I hand. All right, somebody's saying that, all right, I should have multiple means of income first before I should even start saving. That's more lala. All right, Janet goes for team. As an example, let me use Africa as a case study because I'm from Africa, I'm from Nigeria. Is that we do not have the saving or the money mindset. We don't have that culture embedded in us from when we have been a little child. Most times you would always hear our parents talking about, they rarely talk about money around you. The only time you hear them talk about money is when they want to pay for your bills or when there is an emergency to take care of. So money is like an evil that cannot be spoken about. Because the moment you start talking about money, or I want to be rich, or I want to be a millionaire, you become more like the bad egg in the family. So money is a no-brainer or a no-go area for majority of the population. So that brings us to the topic of why saving is very important. Because I want to build up this topic, but just like every other person has picked, is it team A or team B? Now, someone is saying team A, although it could be risky, but with well-informed investment, I think this is the way. All right, so we're going to know which is the best route to go very soon. All right, so the most important thing is this: we must save. Let's establish that. We must save. Now, the question is, at what point do we begin saving? Let us establish this. It is very much important that we save. Saving is very important. So if you're going to be one of the top-notch individuals around town, you're going to be a top level, we're going to be one of the best persons in the world, or the world is to see, you must understand that saving is very important. Saving is very, very important. And just like my friend did make reference to when she started our presentation, she said that it is important that we must have a mindset that attracts money to us. If we don't have a mindset that attracts money to us, that is where we're going to have so many problems when it comes to saving money. So I'm going to advise everybody to get the recording of this event and listen to it over and over again. You cannot save without the proper mindset. You cannot invest without the proper mindset for money. So before you can begin to talk about money, or before you can boldly say that, oh, I'm financially intelligent, or I know what it means to have money, then you must have essentially have the positive mindset about money. All right, how did the whole issue about saving start in the first place? How did the whole issue about saving start in the first place? Now, I'm going to take this from the biblical perspective, which I like the best, because it gives a wider perspective to how saving started. Looking back, for me, saving started as a global practice after Joseph interpreted Pharaoh's dream. If you are a Christian, or if you are, you've at the point in time read the Bible before, you must have heard about Joseph, Pharaoh's dream, where he had 7 fat cows and 17 cows. And from there, he got to appoint Joseph as his prime minister to look over the affairs of Egypt. And that was the moment they started saving. Joseph created a structure. Joseph created a structure. He created a system that encouraged the Egyptians to save. And that was what rescued them in the 7 years of famine. So, first of all, take note of the things I'm saying. Joseph created a system that saved them when there was a year of famine. Now, a year of famine is the level of inflation we are facing currently across different countries. In some countries, the inflation rate is 7%. In a country like Nigeria, inflation rate is between 13 to 15%. In the days of famine, what is going to rescue you? Now, that is what Joseph did at that point. Also, there was a time where Solomon, who is supposed to be the wisest man that has ever lived, said there's a time to keep and a time to cast away. So there's a time for you to save and there's a time for you to invest. I'm going to come back to that also. Also, it's very important that we learn that saving is not just an act that you should encourage. It is an act that you should get used to. Let me say that again. Saving is not an act that you should encourage. Rather, it is an act that you should get used to. Now, what are you saving towards? Now, before I make reference to what you're saving towards, I need to let you know that to be able to save, or to be able to cultivate the art of saving and investing, because I call them a conjoined twin. If you're saving, you're investing into something, because your savings should serve a purpose. Now, if you're saving, the most important denominator for saving and investment is patience. The common denominator to saving and investment is patience. Let me say this. The one major reason why a lot of people find saving very difficult is because they lack patience. You're not willing to look away from what you're putting aside to serve the purpose you have created it for. And you go back there, either you open the handmade safe or you go back into the account and withdraw the money. At the end of the day, you get some penalty. At the end of the day, you end up spending the money. Now, is it that emergencies cannot come up? We're going to speak about all of those things shortly. Emergencies can come up. In fact, unplanned circumstances can come up. But the denominator you need to focus on more is patience. Now, when you're talking about savings, what are you referring to? What are you saving for? Why are you saving? Now, the number one reason why you're saving is to either offset a bill. That is, you're looking at payment for a car, payment for your house, mortgage, electricity tariff, or any other expenses, maybe school fees for those who are in school, or maybe for a function, a wedding, a burial, a birthday, for what Valentine just happened yesterday. A lot of people saved towards Valentine. So if you save towards Valentine, say hi. All right. All right. So that's one of the reasons why you save, towards offsetting a bill. Now, the other reason why you could save is to invest. You want to invest. That is one of the reasons why you save. Now, earlier, AMADI was making reference to the fact that to invest, there's certain things you need to do. The first thing you need to do before you invest is to save, because you need to pull together the resources. Now, some people might tell you that, oh, what if I have all of the resources together? Yes, you might have all of the resources together, but you still need to hold before you invest, because before you invest, you still have to do what I call your research and your own due diligence, and do your technical analysis, like he had made reference to. So before you invest, you still have to save. So if you are saving, then it is very important that it is going to lead you, or that's the prerequisite to investment. So one of the reasons why you save is to invest. And lastly, another reason why you save is for emergencies. Now, there are certain things that you don't plan for. For example, nobody was planning in Nigeria, nobody was planning that there was going to be an hike in fuel price. Emergencies like these cannot be controlled by you. So you say these are emergencies you plan for. So certain times, and certain of our devices might just fall down. Some of them might crash. Some of them might get spoiled unexpectedly. So these are the things you prepare for. They are emergencies that you didn't foresee them happening, but they happen. So the three things you save for: number one is to offset your bill. Number 2 is to invest. And number 3 is to pay for emergencies. Those are the 3 things that will basically, if you sum up all of the things you do with your life, these are the 3 things you do. You are either paying for a bill you have planned for, or paying for a bill you did not plan for, or you are investing in something. It's as simple as that. I don't want to know what it is you're doing. Those are the 3 things we use our money for at the end of the day. You are paying for a bill you plan for, you are paying for a bill you did not plan for, that's emergencies, and the last is towards a project or something else you have in mind, that's to invest. Now, when you're talking about saving, how do you start? You must have a plan for saving. You must have a plan for saving. Now, nobody builds an house before, if you don't sit down and count the cost of how am I going to get this thing done. So the first question you need to do if you want to start saving, just like Joseph did in the time of Pharaoh, is where am I saving from? Now, that brings us back to our quiz where we asked that, should you start saving from what you have, or should you pool your resources together first, have multiple means of income, and then start saving? I would advise anyone who is willing and looking to save to start saving from whatever you have now. You don't need to have multiple streams of income first before you start saving. Let me say that again. You don't need to have multiple streams of income before you start saving. So my answer is start saving no matter how little, then find ways to earn more. Find ways to earn more. Now, when you're saving, some of the things you need to look at is number 1, where am I saving? Number 1, where am I saving from? So you need to look at, okay, I'm a salary earner. I receive so amount. Let's assume you're someone who's staying in Nigeria, for example. I'm going to use Nigeria a lot because that's the country I'm domiciled in. Now you're staying in Nigeria. Where am I saving? Where am I saving my money from? So you receive a salary of about 150,000 naira in a month. 150,000 naira in a month. Ask yourself, how much am I saving from those money? Am I saving 20, 30, 40, 50? Remove a percentage from it. You're already creating a system already for yourself. Now, most times you will hear a lot of financial advisors tell you 50, 30, 20, 20% remove for your savings. That's 20% remove for your savings. That's the usual advice. But I tell you, the minimum you should do is 20%, but you can always increase whatever it is you want to save. So first thing is remove from your savings. If you're a business person now, your money is not consistent. Now, this is for business people. Your savings can be very tricky because most times sometimes you receive money in bits, sometimes you receive it in lump sum. So what should you do in that instance? It's simple. What you need to do is as simple as ABC. All you just have to do is for every amount you receive, have a structure in place. For every payment we receive, after we remove the cost price and we get the profit, I'm going to take out maybe 50% and save, or I'm going to take out 25% and save. Have a structure on ground, have a structure in place, so that once the money is coming in, you know that, oh, we're removing this money immediately, we remove the cost price. So you've enabled yourself to have the culture, you've enabled yourself to have the mindset, you've enabled yourself to have a system that supports saving. Because of the constraint of time, I'll just have to move on now because there's so much to say about savings. But maybe if we have a physical meeting one day, I'll get to expand on these things. Now, when you're considering to save, another thing you must consider is your savings plan. Now, what is my savings target? What am I saving towards? Now, you must access. You don't just save without a direction. You don't just save without a focus or a plan to achieve something. So if you're saving, oh, I'm saving towards a rent, oh, I'm saving to invest, oh, I'm saving to pay these, I'm saving to do these. Have a target you have for. For example, if you're paying to pay your school fees, and your school fees, let's say, is about $50,000, you know that I'm saving school fees $50,000. That's what I'm saving towards. Then you begin to save towards it. You must always have a target for when you're saving. Sometimes the problem we have with our finances is that we don't have a target for what we are saving. So even if you have a savings account, you're saving your money into, you don't have that what will I call it now? You don't have that discipline because there's no target, there's nothing you're saving towards. So if anything happens, you just go to the account and remove money from it. So the most important thing for you to do is always have a savings target. Then know how much you're saving. When you know that, oh, I'm saving for school, school is $50,000. You know that this is how much you're saving, not 51,000, but $50,000. If you have excess, good, but the target is this. Now, how frequent would I be saving for? That's another question you need to ask yourself. How frequent would I be saving for? Am I removing it every week? Am I paying it every month? Am I paying it every 2 weeks? How am I paying the money? You must have a structure and a system in place that will support your saving habits. And these are the questions you must ask yourself. How frequent would I be saving? And ask yourself, how long would I be saving for? Pardon me. Now, if you don't have a target, a timeline to what you intend to do, you would end up not doing anything. If you don't have a timeline to what you're doing, you would end up not doing anything. So the success of you achieving anything or for you to be able to do anything effectively, you must ensure that you have a target. Okay, I'm paying 50,000 US dollars for my school fees. I must save this money before the 5th of May. The 5th of May is my timeline. I'm paying 50,000 naira, that's a target, and it's for school fees. Once you have those structures in place, I know that, oh, every week I must pay 1,000 naira, $1,000, pardon me, $1,000 into this account, a minimum of $1,000 every week. You are already having the system and the structures in place that will support your saving habits. But if you just say to yourself, oh, I need $50,000. So where will I find it from? And I'm thinking of where am I finding it from? When you even have the money, you would not be encouraged to save properly because the system or the structures in place that should enable you to actually save has not been put in place. So for you to achieve what you intend to do, the 5 questions you must always ask yourself is, where am I saving from? Am I getting the money from my parents, from my friends? Where am I getting the money from? The next thing is ask yourself, what is my saving target? Next thing you should ask yourself is, how much am I saving? Ask yourself, how frequent would I be saving this money? Every day, every week, every month? How am I saving? And how long am I saving for? Always have the date in mind. Oh, I'm saving by the 30th of September. I must have saved the money that I'm going to use to pay for my house rent. My house rent is $1 million naira. By 30th of September, I must have saved this money. Okay, I need to ensure that every month I put aside at least, I must put aside 200,000 naira. That's for my rent. So having a system like that helps you save effectively. Now, lastly, how best do you save? Now, this is the last part. How best should you save? Now, I'm going to share my screen now, a minute. Now, how best should you save? Now, I decided to use these because this is what is common to a lot of people in our side of the country, that's in Africa. Now, how best should you save? Now, you should save with a trusted fellow. Now, for some of us, we lack the discipline of money. Now, it takes a long time to actually encourage or instill that discipline within us. Because a lot of us who have the African origin, let me say for at least for the culture that I'm very familiar with, we don't know how to save. When it comes to money matter, we are very poor at it. So what's the best thing to do? Save with someone you trust, the best friend, someone who is disciplined than you, who you know that, oh, I can keep this money with this person, and the person won't spend it, or the person won't swindle my money. Save with a trusted fellow. Another way you can save is using modern apps. For those in Nigeria, in Africa, you must have heard about PiggyVest. Now, that's a good platform for you to save. You can use those platforms to save. You could also use Kuda Bank's spend and save feature on their app. It's an opportunity to save. You can always save with your commercial banks also. You can always open a savings account, and I know there are certain, for example, I know Access Bank has an EIDA account that you could actually use in saving, and you would do that for, as long as you don't touch the money, you get to earn a reasonable amount of interest, double digits per month, that would serve your purpose. Also, you could save in foreign currencies. Now, I think the topic of saving is quite broad, because you should have looked into something we call inflation when considering saving. Now, how should you actually save considering inflation? Let me quickly branch and say that now you need to look at your country and know what the inflation rate in your country is. To save properly, look at what the inflation rate in your company, in your country is, and it should guide you towards your savings. Now, when you are saving, don't devalue the money you're saving. Most of us, we started saving last year, and unfortunately for some people, inflation rate has increased by 2 or 3%, and the interest on the money you are earning is way lower than the inflation rate. That means your money is losing value while you think you are saving it. So for you to actually ensure that your money is still on the same level of what you intend to use it for, always ensure that you monitor the inflation rate in your country. And if perhaps you have to save in a foreign currency to maintain the rate or the value of that money you're saving, it is best to do so. So another way you can save is save in foreign currencies. For those in Africa, in Nigeria specifically, most times it's usually advisable to save in foreign currency so that the value of the money you have at hand is best preserved. Also, sometimes it's advisable to use cryptocurrencies, which is new, but you must understand it first. Please understand these things before you venture into it. From stocks to ETFs to cryptos to NFTs, please understand these things before you venture into them, because you don't want to lose it all. Let me just keep it at that. Now, another best way you can save is this traditional means that we call ajo. Now, this practice is as ancient as the era of the Egyptians when Joseph was the prime minister. So this is just you saving money with a group of people and collecting it in tons. So let's say there are 5 persons saving maybe $100 per month, and the 5 persons, a person will take $500 for this month, another person will take $500 for next month, until it goes round like that. That is what we call ajo, and it has been digitalized now. There are certain companies or parastatals that you can actually download the applications to actually venture into something like that. But be sure of the party you're using before you venture into a practice like this. It is a good means of saving, and you could actually get the money in a lump sum to carry out any of the projects you have. Remember, before you save, you already have a target, you have a timeline you're looking at, and you know that, oh, this is how frequent I want to do it. So that brings me to the end of the savings. Now, let me say this briefly. In Nigeria, there are ways to actually buy a house cheaply. In Nigeria, there are ways to buy a house cheaply, and that's where we come up. My company, Oxford International Group, actually came up with what we call Oxford Build Bay. Oxford Build Bay. All right. Okay, someone's mic is unmuted. All right, so that's what we call Oxford Build Bay, where you could actually get your own house or land, preferably land, for as low as 250 naira you could pay 250 naira every day. You could pay as low as 250 naira every day. So this plan was created to actually ease the means of acquiring properties for low-income earners and mid-income earners. So with as low as 250 naira, you could actually become a landowner in regions of Lagos, Ogun State, and Oyo State. You could create a plan and eventually make a purchase of your own land. So if you're interested in some All right. Okay, so I noticed my mic got muted. Could you please signify where you last heard me to, please?
Yes, we're talking about the Oxford Build Bay. So you were saying if we're interested.
All right. Okay. Thank you very much, Mr. Anthony. All right. So if you're interested in the housing scheme where you could get a land for yourself in regions of Lagos, Ogun State, or your state, these are the three regions that we are currently working on currently. You could visit, I've typed the website in the chat link. That's www.oxfordbuildbay.com. You could visit the website to get a lot of information there. Your questions, all questions you want to ask can be answered there. And you could make a purchase of your own land. You can pay daily, you can pay weekly, you can pay monthly, but you have a duration of 2 years to pay for your land, and all documents will be released onto you after the payment of the completion of the tenure of the 2 years payment. Also, this land comes with its own HMO. So as you're paying, you're getting an health insurance for yourself, and also you have other benefits that comes attached to it. So if you are in Nigeria and you are intending to buy your own piece of land before this year runs out, this is a wonderful opportunity for you to use, because you can get to do that as soon as you want. All right, thank you very much. Someone has uploaded it. So that's our brand ambassador, Tasha. So this is the plan. You can always get your own land at flexible prices from Oxford International Group. So these are partners, and you can see it's simple. The process is very simple. I don't need to bamboozle you or tell you about anything. Check the website out. There are questions you want to ask. Read the FAQs. That's the frequently asked questions. All of the questions you need to ask have been answered there. And if you need more information, you could always come to my LinkedIn platform. That's at Godwin ADEKOYA. Always search me out on LinkedIn and send me a message. I would gladly respond to you. So thank you very much for having me today. I hope I've been able to answer your questions. And if you have any questions, please feel free to drop them. I remain myself, humble self, the Adekoya Godwin. Thank you very much for having me, Mr. Anthony. And have a lovely evening, everybody.
Thank you so much, Mr. Godwin, for the powerfully packed presentation. And I'm very, very sure. And I'm very, very sure our fellow participants got every bit of it as they've been engaging thus far. So thank you very much to me. Thank you very much, CHINEVU. Thank you very much, Godwin. So quickly, we'll just move on to a few questions for those who might have one or two questions to ask. But I guess I'll start so that I'll open the floor. My question will go to all the three presenters, guests. So starting with TUMI. So thank you very much about that. TUMI, are you there? Are you still connected?
Yep, I am.
Very well. Thank you very much. So the very issue of mindset is a very big one and a very difficult one at that to change. So I don't know if there are tools you could recommend or books that you could recommend that go through, or articles or anything just to kickstart, because we need something to just push us to get started. We need to read or see something that will actually push us out of that wrecking mindset that was built into us right from the beginning. So that's for the tools that we can use to actually get started on this new mindset, prosperity mindset journey. And the same question also applies to AMADI. Are there simpler tools that could help us ease our way into investment in the stock market if we don't necessarily have to deal with going to the stock brokers or digital platforms that will stay in the corner of our rooms and just get started in investing already. So I'll start with TUMI. I hope my question is.
Thank you, Anthony, for the question. With regards to tools, there is a lot of books that are in the market, but I know when I started looking at educating myself with regards to money, Robert Kiyosaki's work was the work that I went to. So Rich Dad, Poor Dad is the book to read, and the Cash Flow Quadrant is also a book to read. That is about money. But when it comes to talking about mindset, there's also a number of books that are talking about mindset. And I'm going to selfishly recommend my book, which is You Are Enough. So my book is talking about how do you get to have a relationship with your mind to help you to really recalibrate your life, moving from a state of I am not worthy to a state of I am worthy. So if you don't believe that you are worthy of money, then you would need to recalibrate your mind and start believing in your own worth, so that you are able to be able to attract any opportunities over and above just money. And when it comes to the issues of planning, and I think that the person who I believe is the best person to look at when talking about planning your life, I'm a John Maxwell scholar in terms of how do you really plan your life, even though he's more about leadership coaching. So if you look at John Maxwell's books, that will be a good way of starting on how do you manage yourself. But having said that, I want to say anything that is mindfulness, anything that talks to mindfulness, it's worth looking at, because for us to be able to vibrate the right vibrations for money, we need to really slow ourselves down. So if you are able to get into mindfulness practice, it's very helpful, so that you're able to start hearing yourself, start hearing your conversations with yourself much clearly. I spoke about being present. So for you to be present, you need to really slow yourself down, and mindfulness, practicing mindfulness is going to be a tool to go to. Thanks, Anthony.
Thank you very much for that. AMADI, Mr. CHINEVU AMADI, that tools you could recommend for us?
Okay, tools in terms of building your investment knowledge, right? So it's a book, The Intelligent Investor by Benjamin Graham. That's a very, very nice read. Also, I have a YouTube channel where I try to analyze individual companies. So you can go to my YouTube channel and drop the link to it. So you can just see the thought process, how I try to look at companies. Also, I also look at other asset classes apart from stocks. Then also we can also go to and drop a RISEVEST. So where I used to work, Rise.Capital. Because the website, just look for a link to the Telegram channel. So the Telegram channel where people that do this in investment, so they discuss, they read books, a lot of things happen on the Telegram channel. Also, that's where to start. Then also YouTube channel, the YouTube, generally YouTube, anything you don't understand, always Google it. So let's say, for instance, you don't understand market capitalization, always Google what is market capitalization on YouTube. Remember that investing is a marathon. It will take you time to build this to build a certain appreciable worth of knowledge, right? You're going to make mistakes, you learn from your mistakes. So it's just like, maybe I want to be an engineer. Remember that people that they are investment managers, investment advisors, that's what they do. right? So they spent maybe 4 or 5 years in school, and so don't be too hard on yourself, right? You're not going to learn everything in one day, in 1 year, but with time, you get. So basically, the intelligent investor, check out my YouTube channel. Then also Rise.Capital. That will help. That will kind of be a social, their Telegram channel. That will also be like a social group kind of support system that will assist you as a stock investor. So these are then normal YouTube and Google that will also be helpful to you. So that's basically that.
Thank you. Thank you very much for that. I know Mr. Godwin already listed some tools during his presentation. So I believe we'll work with that. And so we have someone trying to talk, Marco Chukwu Njoku. Are you still there? You can unmute yourself.
Good evening, everyone.
Good evening. You're welcome.
It's a pleasure to connect to everyone on this call. I'm connected from Abuja, Nigeria, and I have 3 questions for to ask, but one for each individual that taught us today.
Okay.
So the first question goes to the lady that taught us about mindset. The question I have to ask is, what if you have 10 years to live and money was never an issue in life? Probably if you needed to travel to Dubai right now, you can just pick up your bags or your luggage, go to the shopping mall and pick up any clothes. You don't need to pay. You just need to just go there, pick the ones you want and go and enter the plane. They don't need to ask you for passport or for tickets. I just want to know, is that a good mindset to maintain when it comes to having a positive money mindset? That's for the mindset question.
To me, I don't know if you got the question.
I just want clarity on the last part. If money was not an issue, and then you went to say, is that having a do you want to just clarify that last part? If money was not an issue, what about mindset?
Okay, what I'm trying to say is this: is a lot of people in life, if you ask them, well, why are you currently doing what you're doing, or why are you currently in the situation you are, they will say that money, money, money. And I didn't say it. Maintaining this type of mindset towards achieving your goals in life, the mindset I developed towards achieving my goals in life, and it's been working for me. You said something about us having a belief towards a mindset and sticking to it. This is the mindset I developed. If I want to achieve whatever I want to achieve in life, I don't see money as the problem. Just like I tell myself, I believe that this word, that whatever you want to achieve, you can just go there and you'll be able to gain access to it. Not see money as an issue. And I use the story of, probably I want to travel to Dubai and I just decide to travel tomorrow. I just pick up my bag, go to the shopping mall, pick up clothes. I don't need to pay. I'm just visualizing myself in this type of world. And then I have to just go to the airport. I don't need to bother about tickets. I'll just board the plane and I see myself in a 5-star hotel in Dubai and life goes on. Is that a good mindset to maintain?
Okay, I think I understand. So in terms of what do you think, because the last question, the last part, when I was talking about the mindset, I said we need to look at what we believe about money, what we think about money, and how we behave towards money. So
Yes.
the example that you are bringing on board is, what do I think about money? So is my mindset about making money a problem? Am I making money an obstacle, or am I making my life not about money, or I'm making money an enabler instead of it being an obstacle? That is part of a kind of a mindset that one develops when you look at your life as a whole. Remember when I started, I said, when you talk about mindset, money is just only part of who we are. It's only part of what our life is about. There is different areas of our lives that we can feel we are thriving in without the need for money. I know of people who can give away all their money and they will still remain happy. So the issue here, and I like the example that you're using about visualizing yourself just working in, is not making money a problem, not making money an obstacle. So when you get out of looking at financial, your financial status, but looking at your life status, are you an abundance kind of a person? So do you think abundance? So what I'm hearing from that question is a mindset of abundance in life. It's not just abundance in terms of money, but abundance in everything else. It could be abundance in health. It could be abundance in opportunities to be able to live the best life, or to be able to serve in how you want to serve the world. So I would say that is an abundance mindset, not just specifically a money mindset. I hope that answers your question.
Yes, it does. Should I maintain the mindset? That's just a yes or no question.
Remember, the question is this belief that I'm holding serving me? Is how I relate to money serving me. So if it serves you, you go on and continue with it. So you look at your life as, I always say to people, look at your life as a science experiment. You are the scientist and you are also the subject of the experiment. What works for you, you work with it.
Okay. Fine.
Thank you.
Then my second question for the stock investor. My question is this. It starts with a story. Back in 2019, as at the month of September, I was working in a job and I was paid, but I was paid peanuts. Probably I was paid 15,000 naira, and that should be around $30 a month. But I still had this mindset of investing in stock. When I started, and I was also investing in stocks, and everything you said about liquidity is true. About, like, I wanted to sell my stocks today and I sold, and the next day I received the cash. But one thing I never understood is the process of the Nigerian stock exchange market and the official broker for the Nigerian stock exchange market. Because currently I can't even gain access to my broker account, and I think I have some funds there. So I stopped trading in the stock exchange account because of I didn't have much liquidity to boost my earnings. So I want to know the current Nigerian stock exchange accounts, and also if there is anyone you can recommend to me about leverage, because you spoke about leverage too.
Okay, thank you for your question. So Nigerian Stock Exchange is not as developed as maybe New York Stock Exchange or some other stock exchange, right? And currently, I don't think there's any broker that allows you to trade with exchange on Nigerian Stock Exchange. But the issue you have mentioned, so the issue you mentioned about being locked out of your brokerage account, that shouldn't be a big deal. Recovering your brokerage account shouldn't be a big deal. But you know, there are a lot of brokers. It wasn't like an official broker. So they are authorized brokers that have seats on the Nigerian Stock Exchange. There are lots of them, right? So you have to like know which of them did you are using their service. If you reach out their customer care, they'll show you how to get back your account, either by resetting your password or maybe doing something else, right? If you don't have I guess you should have an online presence. Don't have an online presence, you have to go to the office or something, and put a call across to them. but that shouldn't be a big deal. You should be able to get back your money. But what I also advise you that see leverage, it looks appealing, looks sexy, but that's also the fastest one going from $100 to $0, right? So you have to be very, very experienced before you can use leverage because leverage punishes you for your mistakes, right? It punishes you. So remember that if you are using 5x leverage, if it stocks goes down by 20%, you've lost all your whole money. But if you are not using leverage, it's very, very difficult for you to go to zero because unless a company goes bankrupt, that's before you go to zero. You can lose 90%, you can lose 95%, you can lose 98%. But it's very, very difficult to not like it's impossible, but leverage can put money in your account. Tomorrow you are like you've been wiped out. I hope I answered your question.
Yes, you did answer my question, but you didn't recommend any broker to me, specifically from the one you used. And I understand leverage totally well because I trade the forex market, and it's always advisable to trade with leverage, but with proper risk management. So, so I just want to know you because I have tried to contact the customer service, but the server of their platform is not even working again. The broker I use. But the thing there was that I already pulled out my funds back in 2020 during the lockdown. Yeah, so because I stopped working and no much income was coming in. So I pulled out my funds. I'm not worried about my funds, but I just want to go back
Mr.
into that
Njoku,
process. So
I
that's
think
just
you
it.
might have to do maybe a one-on-one session with Mr. CHINEVU so that we can keep to our time.
Okay.
Yes,
No
yes.
problem. You can just reach out to me on your LinkedIn, my YouTube channel. I'll be willing to answer your questions.
All right, thank you. Do you have any question for the last speaker? In terms of savings?
No, the last speaker I already added him up on LinkedIn. I think
All
I'll
right.
talk to him.
All right. So thank you very much. I don't see anybody raising their hands for any more questions. So I think the topics were well presented and well understood. So we are grateful for that. So we have a media presence where we have people who help us to do, how will I put it, a mini research, write well-fronted articles, and put them up on anthonyx.com. So we talked about a lot of different topics that could best serve finance interest. So from there, I'll also be linking to Mr. Chinedu's YouTube channel. I'll get a copy of TUMI's book and also list it on the platform for those who might be interested to get a copy. I'll also get some free books from Mr. Godwin for those who be interested to get a copy. So all the information about courses and events and other books will be listed on this platform. So for other related finance articles and helpful articles in terms of businesses and finance, you can all get them on this media channel, on this blog, anthonyx.com. So after all said and done, like Tumi mentioned, the application of knowledge is power. So we've all garnered some knowledge this evening. So it now gets to application. So we'll be forming a form of an accountability group whereby we're going to be following up on one another, checking up on one another. So far, so good. What are your financial plan or commitments? And what have you done so far? What are your limiting factors or beliefs? Where do you need help? What can we do? And to our guest speakers, we are very, very much indebted and grateful to you. As much as we want to make majority of our youth financially literate. We thank you for the time and the effort. We hope that when next we call upon you, you also answer us. You also still spare us some time to attend to us. I hope we can count on you. So I'm very, very grateful. So we hope to have this once again this year before we close for the year. And this we want to make it twice in a year event, so as to make sure we reach out to as many as possible when it comes to being financially literate and how best to go about it. So I hope to me when I call upon you, I'll still get the presence, your approval.
Sure.
Thank you very much for that. And Amadi, I hope I'm able to reach out to you also.
Sure, sure. Had a nice time.
Yes, thank you very much. And Godwin, I hope you won't see us as wasting your time.
Definitely not. Thank you very much, Anthony.
So we are very, very grateful. Thank you very much for making this evening action-packed, knowledge-packed one. And we hope to we wish you well, and we hope to connect to you one-on-one as well, and, towards the journey of making each and every one of us financially literate. So thank you very much for your time. We appreciate you, we love you, and we'll keep in touch. Thank you, and have a lovely evening. Thank you very much, everyone. And we'll come to the end of this program. Thank you. Bye.
Thank you.